Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the latest trends from the Q2 earnings. The company on our radar today from the earnings season is India's largest paint maker, Asian Paints, which has reported its Q2 numbers. The net profit for the company have grown over 53% on a year-on-year basis to 1232 odd crore rupees in the July to September period. The revenue, however, has come in on a flattish note, just about a 0.2% surge at 8478 odd crore rupees. And this figure has slightly missed the estimates on the street. The operating profit, however, has definitely shown a good improvement, 40% upside for this one. 1716 odd crore rupees is the operating profit for the company. Even the margins have seen an improvement from 14.5% to 20.2%. Now, joining in to discuss more insights from the Q2 earnings as well as a business outlook going forward is the top management of the company. With me, joining in is Mr. Amit Syngle. He's the MD and CEO of Asian Paints. Welcome, sir. Thank you so much for taking the time out for Business Today TV and for this interaction as well. Let me kickstart by understanding about what are the contributing factors to the growth in profits and the margins, which has shown an improvement in this quarter. Especially when we talk about the margins, are they sustainable over 20%?
So overall, first, thank you for inviting me on the channel. I think the quarter was strong from the point of view of overall profits and margins in terms of what we have seen. There were two, three factors which kind of led to it. First of all, we saw a deflation of close to about 4% in this quarter. So the material prices were fairly soft, and I think which basically helped us in terms of really looking at improving our overall margins to that extent. Second, I think there was good work with respect to looking at the operational efficiencies along with the formulation efficiencies in terms of looking at savings which kind of came into that extent. And third, we see is that some parts of the business like industrial and institutional business has done well in terms of looking at contributing to the overall margins. So I think this led to in terms of looking at good profit growths in terms of what you have seen, and also margin improvement across gross margins, PBDIT margins, and PBT margins overall to that extent. So I think those were basically the highlights in terms of possibly leading to this kind of overall margin improvement and a great profit growth which has come in.
Right. So I also wanted to understand what are the factors that have, led to perhaps flattish growth on revenues. Could you reason out why? And the outlook on the top line for FY24, is it the impact of patchy rainfall? Is the demand muted? Could you reason out some of the reasons there?
So overall, as we see it, I think the rains were fairly heavy in July as per our estimation, and they were also erratic and sporadic throughout the 3 months in terms of what we have seen. That really definitely impacted the consumer sentiment and in terms of the demand kind of really decreasing to that extent overall. The second factor which we have seen is that the T1, T2 cities have done much better than T3, T4. So in short, the rural demand basically, which was picking up in Q1, we saw some reversal in that trend, and the rural demand was definitely down. Third, we saw that there was also some down trading, which we had, which we saw in the rural markets to that extent, where they moved on to a larger economy set of products, which saw our volume growth for the quarter at about 6% to that extent, and therefore a little bit of a flattish value growth in terms of what we saw. So these were, I think, the prime reasons in terms of what we saw. We also saw, I think, a deferment of this demand to Q3, given the fact that you have a larger festival season, which is there, Diwali being in mid-November to that extent. And I think all these reasons led to a little bit of a demand deflation as we see in Q2.
Right. So I'm glad that you pointed this out. This was my next question also on the delayed festive season. And do you see now demand shifting to Q3? And, which are the various segments that are likely to see better demand now in Q3 and Q4, sir?
Overall, what we see is that, whenever there has been a longer Diwali and a festival season, we've always seen a better kind of a performance which comes in Q3 to that extent, because you get additional 30 to 40 days in terms of the retail demand which kind of comes in, and therefore what we see is that definitely the retail market upsurge will kind of go. We also see that the upsurge in terms of premium luxury products should happen at this point of time in terms of retail. The other market which we are seeing inflation happening is the projects institutional market, because now the construction activity has opened up. The new construction is in full steam, and therefore we see that the real estate will kind of also pick up in a big manner. And the third area is that the industrial demand will continue, with the auto sector doing quite well overall. Even the general protective paints are doing overall quite well. So I think that is another segment which will continue to kind of grow. And therefore, we are looking fairly positive on the quarter 3 growths.
Okay, so on the raw material, you briefly mentioned it, and I wanted to take that point a little forward to understand, are the raw material prices still on a declining trend? What is the outlook going forward? Why I'm asking you this is because last time when we were speaking, you did mention that if the raw material prices continue to be favorable for you, you wouldn't rule out a price cut. So I wanted to understand that from the price trends perspective too.
So I think the prices definitely in quarter 2, as I said, there was a deflation of about 4% in terms of what we see. But I think come September, from the second fortnight onwards, we have started to see a rise in terms of the crude prices and all the crude derivatives, which are essential raw materials to the paint industry. We have seen a hike coming in some of those areas. We anticipate, given the current geopolitical situation which is there, a 1.5% kind of increase happening in material prices this quarter. So we're going to watch again the prices in terms of which way they are going, and take a call in terms of any price corrections if we need to kind of take as we kind of go forward, given the fact that the current environment is showing that there would be definitely some inflation in terms of material prices in Q3
Yeah.
and Q4 going forward.
Right. Since you talked about the geopolitical tensions, sir, I did want to understand, your international business growth as well. How has it panned out in Q2? And going forward, do you see some impact of the geopolitical crisis on your Middle East, especially the space that you work in?
So the quarter 2 performance, we've kind of grown about 2% in AP international on a constant currency terms overall in terms of what we've seen. Larger contribution has come definitely in terms of the Middle East markets doing well for us in this quarter, and parts of Africa, which is Ethiopia, which has done well. I think the Asian markets have not done well, especially Nepal and Bangladesh. We have seen some depreciation in terms of currency in both Bangladesh and Egypt's market to that extent. And what we see is that given the current geopolitical situation, definitely I don't see that the international overall demand conditions would improve so much. I think it will take, now a couple of quarters in terms of how the international demand really pans out. Immediately, see that the Middle East market would kind of really nosedive, or there would be a larger effect in terms of the demand there to that extent. But we see overall the international markets would take some time to kind of really come up as we kind of go forward.
Hmm. Also, sir, domestically speaking, I always ask you this, and you have rather been, very, very confident of staying ahead of competition despite the entry of big players like Grasim Pidilite, JSW. Since you have been a leading player right here, tell us how are you planning to continue with maintaining your market leadership despite the entry of such heavyweight competitors?
So I've always maintained that the paint industry has always seen a lot of competition in the last 2 decades. Even the last 4 years, we have seen a lot of biggies come into the market, and they've had no impact whatsoever in terms of looking at changing any course in terms of the paint industry. We've maintained that the paint industry is fairly big at 75,000 crores, with almost about a 30% contribution coming from unorganized sector, and therefore there is enough space for everyone to kind of come and bat in this market to that extent. Our core principles in terms of building brand equity, looking at a world-class supply chain, looking at innovation, and really kind of keeping an ear to the customer demands would kind of stay as key parameters and pillars in terms of what we want to take. So therefore, I think the entire game is in terms of building excellence in these areas as we kind of go ahead. I don't think so there is any cause of worry in terms of newer competition coming, even if in terms of whatever be the size of that competition.
All right. Well, fair enough. Thank you so much, Mr. Single, for being with us on the show and discussing all these insights about your quarterly earnings. All the very best to you for the coming quarters. And here's hoping to see you very soon in the next quarter, too.
Thank you so much, and wishing all your viewers a very happy Diwali.
Thank you so much, sir. I wish you the same from the entire team of Business Today Television. We wish you, your teammates, your company and your family members also, great Diwali ahead, sir.
Thank you so much. Thank you.
If you like the video, do like, comment, share and subscribe.